The market treats artificial intelligence like a sovereign consciousness floating in the ether. That is a weightless lie. Training a trillion-parameter model is a violent exercise in physical constraints. If you cannot synchronize 100,000 processors without liquefying the copper interconnects, you are just executing a multi-billion-dollar thermodynamic failure. Welcome to part 1 of a GreenCandle forensic audit. Today, we deconstruct Broadcom ticker symbol AVGO. When hyperscalers desperately attempt to escape Nvidia's hardware margins, they must forge custom silicon. Broadcom is the sole architectural foundry capable of manifesting those bespoke AI brains at a gigawatt scale. That is not just a competitive advantage. That is an absolute structural chokehold. CEO Hock Tan has orchestrated a masterpiece of corporate enclosure. Broadcom operates an inescapable, dual-layered monopoly, capturing both the physical hardware routing the data and the virtual control plane managing the servers. Once a tech giant integrates this deeply into the Broadcom ecosystem, the exit doors simply cease to exist. Let's dissect these schematics and map the physical bedrock of the AI build-out. Look closely at this structural divide. Broadcom expends zero capital designing consumer applications. They are the apex infrastructure cartel of the digital economy. When hyperscalers route massive compute workloads across a server farm or a private enterprise cloud, that traffic runs on Hock Tan's architecture. They own the fundamental plumbing of the AI supercycle. This entire conglomerate rests on 2 load-bearing pillars. The first is the physical silicon bedrock, dictating the absolute thermodynamic speed limits of the hardware. The second is the virtual control plane, establishing total dominance over the enterprise software stack. Bypassing their architecture isn't a matter of budget. It requires defying the laws of physics. Let's examine Pillar 1. Broadcom is the global apex provider of networking silicon. They utilize a fabless manufacturing model, outsourcing the actual fabrication to TSMC. Their immense leverage stems from owning the indispensable intellectual property. The massive switch chips like Tomahawk and Jericho that act as the primary circulatory system for AI data centers. Their physical grip extends far beyond the server rack. See that wireless segment on the dashboard? Broadcom provides the highly specialized radio frequency filters and Wi-Fi combo chips inside billions of iPhones. From massive enterprise storage arrays to the broadband router in your home, their legacy silicon quietly dictates the baseline connectivity of the hardware ecosystem. Hardware is only half the equation. Broadcom realized that maintaining physical dominance required governing the virtual layer sitting directly on top of their chips. That is exactly why they executed the massive $69 billion acquisition of VMware, securing the underlying operating system of the enterprise private cloud. They did not stop at virtualization by integrating Symantec for enterprise cybersecurity and CA technologies to maintain legacy global banking mainframes. They constructed a software hierarchy that perfectly mirrors their physical hardware dominance. It is a complete, inescapable vertical integration of the modern enterprise. The legacy networking and mainframe businesses are slow growth, but But generative AI is violently re-rating their valuation. Hyperscalers like Google and Meta are desperate to escape Nvidia's massive hardware margins. Consequently, they hired Broadcom as the designated architect to design and manufacture their custom AI silicon brains. Training these models requires tens of thousands of custom ASICs communicating in microseconds. Broadcom's scale-out Ethernet is the only technology capable of stringing those unique supercomputers together. The synthesis is ruthless. They weaponize the guaranteed cash flow from their legacy pillars to fund the domination of the bleeding-edge custom AI build-out. Look at the foundation of this asset-light fortress. See that $8.01 billion in Q1 2026 free cash flow. Broadcom uses that massive capital to preemptively secure the physical supply chain. They have contractually locked down TSMC's 3nm and 2nm capacity, along with high bandwidth memory allocations, straight through fiscal 2028. Notice that $13.13 billion, 68% adjusted EBITDA margin. That is pure structural engineering. By pushing the multi-billion-dollar capital expenditure risk onto foundries like TSMC, while contractually securing the output, Broadcom entirely insulates itself from traditional supply chain shocks. Buying up the factory time guarantees their ASIC dominance. This bespoke silicon pipeline is the true core of Broadcom, underpinning their massive $100 billion 2027 AI revenue guidance. When hyperscalers realize they cannot survive Nvidia's 75% gross margins, they pivot to custom ASICs. Broadcom provides the foundational IP and executes the complex TSMC tape-out, extracting massive upfront engineering fees and strict unit margins. The US hyperscale pipeline is a monolithic entity. Google's Ironwood TPU v7 is aggressively ramping, while Anthropic scales to a massive 3 gigawatts. Furthermore, management officially confirmed OpenAI as their 6th major custom silicon client. OpenAI alone will install over 1 gigawatt of their new Titan capacity in fiscal 2027. Broadcom does not just sell blueprints, they execute bleeding-edge physics. On February 26th, they shipped the industry's first 2nm custom compute chip to Fujitsu to power the Fugaku Next supercomputer. Executing this level of extreme complexity proves to the US giants that Broadcom can physically deliver the exact architecture required to break Nvidia's grip. Those custom ASICs are useless if they cannot communicate. Networking is jumping to a projected 40% of AI revenue in Q2. See that Tomahawk 6 schematic? It is the world's first 102.4 terabit per second Ethernet switch. Built on a 3nm process, it utilizes cognitive routing 2.0 to handle dynamic load balancing across massive ASIC networks. This architecture is a direct assault on Nvidia's proprietary NVLink. By utilizing the 51.2 terabits per second Tomahawk Ultra and scale-up Ethernet protocols contributed to the Open Compute project, Broadcom allows hyperscalers to wire up 512 custom processors in a single massive cluster without relying on closed ecosystem NVIDIA hardware. Standard 2.5D planar packaging has hit a physical brick wall. Placing custom compute logic and memory side by side on a flat interposer is severely limited by reticle size and thermal density. Horizontal connections inherently increase latency and throttle power. Broadcom disintegrates the traditional flat processor with their 3.5D extreme dimension architecture. By utilizing bumpless hybrid copper bonding, they stack the 2nm top compute logic directly on top of the 5nm memory cache data. Now travels vertical microns instead of horizontal millimeters. This structural engineering integrates over 6,000 square millimeters of silicon. It yields a 7x increase in signal density and a massive 10x reduction in die-to-die power consumption. Crucially, this vertical stacking allows hyperscalers to physically manifest their ASIC designs while entirely bypassing the industry-wide CoWoS planners substrate shortage. When custom ASICs push data rates exceeding 200 G per lane, transmitting electricity through copper generates fatal heat. Broadcom circumvents this by integrating optical lasers directly onto the networking silicon. Their third-generation co-packaged optics transforms electrical data bottlenecks into frictionless beams of light. Look at the unit economics on that chart. Standard pluggable optical modules consume up to 20 gigajoules per bit. Broadcom's integrated optics slash that consumption down to 5 at a 3 gigawatt hyperscale ASIC deployment. That 50% energy reduction is the literal difference between continuous operation and thermal bankruptcy. Then it's time for a reality check. The market praises innovation, but Broadcom excels at enforcement. Look at the software segment, which generated $6.8 billion in Q1. Broadcom ruthlessly gutted VMware's chaotic 9,000 SKU catalog down to 4 core offerings and eliminating perpetual licenses. You forced a subscription mandate on the entire global customer base, while technically cutting the core list price to $350. They simultaneously raised the minimum requirement to 72 cores per CPU for enterprise edge deployments. This effectively multiplies their hardware licensing cost by 4.5x. You do not have to appreciate the pricing strategy, but you must respect the financial stickiness. With total contract value exceeding $9.2 billion in Q1 alone, Broadcom successfully converted VMware into a forced subscription recurring revenue trap, permanently locking in the enterprise infrastructure. While the AI A6 segment is a hypergrowth vector surging 106% year over year to $8.4 billion. The foundation of this empire relies on its $4.1 billion non-AI business. That includes legacy broadband and multi-billion-dollar radio frequency connectivity agreements with Apple, providing a guaranteed revenue floor. Broadcom operates a closed-loop capital strategy. They extract billions in pure free cash flow from these mature R&D-light segments and funnel it directly into advanced 3.5D packaging research for their hyperscale clients, alongside massive shareholder returns like their new $10 billion share repurchase program. In any structural analysis, you must check the perimeter for apex predators here. The only genuine threat is Nvidia's proprietary InfiniBand. Broadcom counters this by anchoring the Ultra Ethernet consortium, ensuring hyperscalers can standardize on an open Tomahawk architecture to avoid Nvidia's closed ecosystem. The physical reality of substitution is brutal to abandon Broadcom today. A hyperscaler must scrap years of co-developed custom ASIC roadmaps like Titan and Ironwood, abandon extreme optical power efficiencies, and manually rip out their VMware enterprise infrastructure. The switching cost is measured in billions of dollars. The entire artificial intelligence boom rests on a fundamental illusion that software scales infinitely. It does not. Software scale is strictly bounded by hardware physics. Broadcom understood this before the market by monopolizing the custom silicon pathways and the network switches required to link them. They haven't just built a product line, they captured the absolute physical bottleneck of the AI supercycle. While the broader market remains mesmerized by algorithmic breakthroughs, we look at the concrete. This is a GreenCandle reality check. You do not analyze Broadcom by looking at software hype. You evaluate them by measuring the sheer mathematical impossibility of building a gigawatt-scale data center without wiring it directly through Hock Tan's proprietary architecture. But establishing an inescapable structural advantage is only the engineering phase. Translating that physical monopoly into a margin-expanding financial machine requires ruthless corporate execution. Now that we have mapped the physical blueprints, we need to audit the actual capital flow. Join us next time as we stress test the balance sheet in Part 2. Financial forensics and trade architecture.